The housing market is not going to crash in 2024. There, I said it. Now, there's a lot of videos out there that we've been looking at that are predicting a housing market crash in 2024. And frankly, I think it's clickbait. Frankly, I think it's if it bleeds, it leads type thing. In today's video, I'm gonna go over some images, and specifically the last two images are a little disturbing. So if you're at all queasy at all, you might not wanna watch.
Yeah. Okay.
But ultimately, I'm going to show you why I do not think the housing market is going to crash in 2024. So let's get into it. Now, like I said, we're going to get into the images here that I think are really going to show and tell the tale of why I don't think the housing market is going to crash in 2024. So in the first image, what I want to show you here is the average price of homes sold in the United States. Now, this goes back to 1965. You can see this ascension. It's an incredible logarithmic line. It goes up from the left to the right, from 1965 all the way up to 2024, where we are here right now. And there's actually a little dip here in the end. Pay attention to that. So I want you to see that this graph, this image goes up from the left to the right, and that is the increase in prices. So this is all going to make sense as I get especially to the last graph. The last image is really going to show you why all of these keep going up left to right. So let's get into the next image. Now, the next image here, and this comes from the Federal Reserve's website. So this all has to do with monetary policy. Let's not get too much into that. But ultimately, I want you to see here that the first graph went up left to right. So those are prices have gone up. That's the Federal Reserve basically showing, and also Case-Shiller, which I'm going to show you here a little bit later, which is an indication of housing prices, average house prices, and so forth going up. Now, this is the median household income. Look at it going up from 1986, okay? So this is as far back as they went to 1986. Right above about $20,000 per year. And it goes all the way over to 2024. And this is right around above $70,000 a year. That's the average household income. So that's an interesting thing. So why has income gone up? It's gonna come into this last image. I'm gonna tie this all together for you, but I want you to see it goes from left to right, similar to the first. As average home price has gone up, median income has gone up, right? So let's get into the next graph. The next graph is the only graph, the only image that I'm gonna show you in here that actually goes down. So this goes from left to right down. So this goes over to November 22. This is recent data that housing affordability has dramatically fallen off. What is housing affordability? We've gone into it in other previous videos, but essentially what it is the median income in relation to the prices. So the affordability has gone down because prices have gone up, but wages have not gone up. And also another image that I'm going to show you in here actually shows you, because of inflation, the consumer price index, that the price of goods in that have actually gone up. And that's going to be in relation to the last graph. So you can see here that in 2023, right over here, and like we're in 2024 now, I mean, it is nearly at an all-time low. Housing affordability is an all-time low because of the cost of goods are up and wages have not gone up with those cost of goods. So let's go into the next graph. Now, this is the consumer price index. Now, let's not dive into this too much, but basically what the consumer pricing index is, and you've heard it on the news before, the CPI. The CPI is basically a basket of goods. It also includes rentals as well. So as rents have gone up, as the price of bananas have gone up, as the price of gas has gone up, this is called the consumer price index. And this is an indication of how much goods cost, right? So you can see that goes up similar to the first graph. It goes up from the left to the right, all the way back to like 1920. They didn't really measure things quite as well back then as they do now, but you can see that ascension, especially starting in 1970, where that inflation was crazy. There's some people, I'm sure, watching this that remember in the 70s, inflation really started going up, but it kept going up. It did not just kind of stall and go down. Inflation has continued to go up, and inflation is a direct result of the consumer price index. Now remember, these graphs, these images continue to go left to right up. Everything is going up. I want to show you the next graph because a lot of what I'm going to go over here is basically protecting your wealth or growing your wealth, right? And I do believe that owning a home, and I'll continue to show you graphs here, images that show you that owning a home is going to help you keep up with that CPI, that as consumer price index goes up, housing prices go up as well. So that kind of protects you, that continues to increase your net worth. This is the S&P, the Standard & Poor 500. That's the 500 top companies in the stock market. And this goes up. You can see this is a very similar trend. It goes up from the left to the right, right? Like it goes continuously ascending up. Now, remember, this last image that I'm going to show you will tie this all together, but this is the S&P. This is kind of a Warren Buffett approach. This is that if you buy the S&P, if you dollar cost average, that's how people have continued to gain wealth. They have put money into the stock market, and so they've kept up with that inflation. So that dollar cost averaging Warren Buffett style, this has helped protect people's wealth. So in this next image, this is the NASDAQ. This is a little bit more aggressive, right? The NASDAQ is basically the technology stocks, and that's why it actually goes up dramatically more, because if you heard of the FANG stocks like Facebook, Amazon, Google, Netflix, those are the FANG stocks. Those are in the NASDAQ, and that goes up dramatically more. Now, we only went back, here down to 1,000, and it's all the way up. It peaked out right around in 2020 at 18,000, but it's peaking back up again. And again, this last graph is going to tie this together, but the NASDAQ has a much more dramatic ascension, right? So if you were in the NASDAQ rather than the S&P, you actually would have won since 1980, but back then, technology wasn't as big a thing. People wanted to stay in the top 500 companies. So, those people that were in the NASDAQ won a little bit more than the people that were in the S&P. But the same theme is here, moving up from the left to the right. And the last image is going to tie this all together. So that's the NASDAQ, left to right, ascending up, similar to the Consumer Price Index, similar to Case-Shiller home prices, average home prices. All of that has continued to go left to right and up. All right. Now, I wanted to throw this in here because I think it's a valid thing. People talk about gold and all that. And if you look back over history, the people that have, and this is like Rothschild kind of money, how did people really protect their wealth? It was through real estate, which land was a big deal, fine art, and gold. So I did want to include gold in here. This is not a plug for gold, but it does show you that gold goes up from the left to the right. This is back in 1994, and it goes all the way up here to 2022. If you look over from 1994 over to 2023, that is still the same line that goes up from the left to the right, right? Same as the Consumer Price Index, same as median income has gone up, so has gold. I mentioned it earlier that the only graph that goes down is the affordability. This one here is the 10-year Treasury. Now, a lot of the macroeconomists look at the 10-year Treasury, and they basically are able to see kind of how the economy is doing. These gray lines in here are recessions, right? So you had a recession in 1975, you had a recession in 1980, and so forth. 1991, the dot-com. You had a recession in 2003. You had a recession, obviously a big recession there in 2008. Now, the 10-year, what happened was that the 10-year actually went down. So after the 1970s, as inflation went up and Paul Volcker raised interest rates, he had to continue to raise interest rates and continue to raise interest rates all the way happened into the early 1980s. And then what happened is that interest rates actually started to fall, right? The 10-year note or the 10-year Treasury is in direct relation to the interbank lending and these kind of things that have to do with mortgages and so forth. There is a relation between the 10-year Treasury and the mortgage that you have on your home. Now look at it from 1980 all the way down to 2020. It's an inverse, right? So it goes from left to right down, whereas everything else shows it going up left to right. Now, the 10-year Treasury was at an all-time low in 2021. Now, that was during COVID. That was where I'm going to show you this last image. Basically, is that you're injecting more money. Money becomes cheaper, right? So as interest rates go down, it's more affordable to leverage money. That's the simplest way to think about it, all right? But what happened, the inflation really started to kick in, and this is what the Fed started raising interest rates. They started raising the 10-year Treasury, and that had a direct relation into mortgages. Right now, mortgages, you're looking at around 7.5% to 8.5%. Now that's dipped up. Now, if you look at the very, very end of this graph, and this actually relates to the last graph that I'm going to show you, the last image I'm going to show you, it dipped. So the 10-year Treasury right here at the end, you can see that at the very end, it's 2020, and then at the very end of the graph, you can see it drop down. So as that has dropped down, our phone has actually started ringing more. As the interest rates are coming down, which everyone will, for the most part, most pundits are saying that interest rates are going to lower into 2024. And you're seeing that here on this graph. And that's why, tying this all together, I do not think that the real estate market is going to crash. This is the last graph that's the absolute most important graph to look at, and that is a significant ascension. Now, this is what's called M3. This is basically the money or the currency that is in circulation out there, the money that has been printed. Now, they actually stopped reporting this in 2020. Very interesting, right? Look at that hockey stick going up from 2019 to 2020. Well, guess what that continues to do? After 2020 and 2021, the money supply or the currency supply was increased by over 40%. So that hockey stick right there, right around 2019, actually continues to dramatically not go at this angle, it goes at this angle. It's starting to go parabolic, meaning directly up. That's parabolic, going directly up. So they stopped reporting in 2022 for you conspiracy theorists out there that they don't really want people to know how much money currency is actually in the money supply. This, you can go and look at all kinds of stuff. If you want to reach out to me, I would be happy to talk to you about the fact that the money supply has gone up by 40% since 2020. So that's where that incredible inflation has happened. That's where housing prices have spiked. And ultimately, remember back to that 10-year treasury. That has gone down. Home affordability has gone down because the price of goods have gone up. And this last image is the most important image. This is the thing that you want to follow, that actually they're not even giving you the data for you to follow it anymore. Like if you actually saw this, on a graph going up the way that it has by increasing by 40%, that's why I continue to think that the home prices are going to continue to go up. It looks like the 10-year treasury is going down, and the pundits are saying that the 10-year treasury will continue to go down, interest rates will continue to go down. And so that's why I think, and I believe in my heart of hearts, because I've been thinking honestly for years, because I had a little bit of shell shock and PTSD.
It's hypervigilance. It's not uncommon in post-traumatic stress disorder.
After 2008, again, I've been in the business for 20 years. And frankly, I thought that there was going to be crashes since 2008 because I was like, oh, this is going to happen again. This is going to happen again. But remember from previous videos, this is not a mortgage situation. This is a currency situation. And in this particular instance, I think that the currency is going to continue to be injected into the economy, and that is going to continue to raise prices. And the only way to protect yourself against that is either with gold, which can be a little bit volatile, fine art. I don't know if you like buying the Mona Lisa or not, but that's not an affordable thing to go out and do. Real estate is the best place that you can continue to put your money into, and dollar cost average whatever you have to do to protect yourself against that CPI that's going up. Real estate is the place to go. And I think that this graph and that these images show you that money supply is going to continue to go up because the interest rate has gone down. And ultimately, that's why I think in 2024, I think you're going to continue to see prices rise, and ultimately probably into 2025. Now, there are all kinds of dips and ups and downs. The chart doesn't always go up left to right, but you can see over time that it has gone up from the left to the right. So if you buy a home now, even if it drops next year, even from 2008 and that, you would still have won from buying in 2008, even if you had lost 60% of your value. If you continued to pay that mortgage, you would still be on the winning side over that time. But people want that immediate gratification sometimes, and ultimately that can cloud a little bit of our thinking. We can get scared and say, oh my God, my house dropped by $200,000. It was $300,000, now it's $100,000. Again, I don't think that that's going to happen again, because I don't think that the market ultimately is showing us that. The market is showing us that this is not a mortgage situation. Defaults are actually at an all-time low. If you really want to keep up with inflation and protect your wealth, back to the Rothschild kind of thing, I still think real estate is a great place to be. Please, I'd love to hear your comments below. Let's get a dialogue going here so that people can get their different perspectives on this. Drop me a comment below. You think I'm in outer space? Awesome. You think I might be right? Awesome. Either way, I don't have an attachment to this, but please drop a comment below. I'd love to hear from you on your thoughts. Do you think that the housing market is going to crash in 2024, or do you think it's going to go up? Let me know. So I hope you enjoyed this video, and we'll see you on the next one.